following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials up 46, NASDAQ up 43, S&P's up 8.5. This market's giving it up big, folks. We got the FOMC minutes come out. Bottom line, market liked the minutes, thought it was dovish. Market goes topside. Bonds kind of flatten out. Dollar goes down. Gold goes up. Then the market decided that, guess what? It's not dovish. It's bearish. Well, it's hawkish. And what happens then? Dow goes from up 245. Now we're up 33. Bottom line, dollar index goes from up 200 to down 100 to back up 374. And notes and bonds are basically breaking lows, and rates are going up. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So in the world of the S&Ps, let's take a look at them. February 5th is the number, folks. That is the number in spades. So this is what you have. February 5th, downdraft, 294 million shares. High out there, 275.85. First time that we get up there and do the dead cat bounce, that was on the 7th of February. We did 167 million, going against 294. Can't handle it. Go to a lower low, 252. We get a nice counter trend bounce. First time up, tries to test it, which was last Friday, 160 million. Yesterday, 86. Today is going to be anemic, 48. So you get 48 going against 160, going against 294. That sets up lower prices. NDX 100, the 3 Qs. Now, if this fails, it's going to be pretty amazing because of the fact that it's so hard for it to fail because it was up so nice. So, NDX 100, the 3 Qs, 167.72 at 1-2, and 165.75 is the number. And we are at 165.89 right now. And let me tell you something. If these Qs do fail, just fire away. Because then you're going to have harmony that all the indices failed. That's the bottom line. You know, what you had out here yesterday is this. Yesterday, you had the Qs and the NDX 100 go up with higher volume. They couldn't handle price. But then you had the S&P and the Dow go down with much lower volume, and that's why we had this nice bounce here. So as we come into the close today, all these, if they close underneath them, bang, that's your deal, man. That's when you're going downtown. As we're sitting here just going through it, we just came right underneath it. Right now, you're at 165.65. So the bottom line is that this is some serious business, man. Dow Industrials. Let's go over to the Dow. We take a look at the Dow. Well, yeah, I guess we're 245 up, and as I'm yapping away here now, we're down $27. They're selling away. So now what do you have is this. Okay, so you have the downdraft in place from January 26th. That's the high. You have the lows out there at February 9th. Let's see. Today's only Wednesday. Yeah, this has enough times to go after them. And what I'm saying there, the reason it has enough time to go after them is this, is that we have a short month period, but we have 2 days this week. You have 2 days next week in order to get fired down before even window dressing comes. So I suspect that's exactly where we're going to be going here. Let's go take a look at some of the, let's go over to the gold contract and see what the gold contract, when we pulled this up at the 3 p.m. update, the volume characteristic was still okay. It is okay. We're going to need a rejection of price, but the volume characteristic is there, meaning what you have is this. So yesterday, we did 374,000 contracts. Today, we're at 233. So we're not going to do 300. We're going against 432. So now what you need is that you're going against strength. You're going to need a rejection of price. If we go to the GDX and we take a look at the GDX out here, now this went higher with lighter volume, which is a problem. 25 million shares. Now we're basically, more than likely, the GDX is going to commit to this 2168. 2168 is the high of the low that was established out here on the 9th. We go take a look at the 10-year note, 10-year, and it's the interest rate structure, folks, that's sending this market into conniptions. 10-year note, bottom line, you are going after the low from last week, which is 120.01. Right now, you're at 120.04. We went to 120.02. That puts the 10-year right now at the high, 2.948. If we go take a look at the 30-year, what's happening with the 30-year? The 30-year is blowing through its bottom. Yeah, the 30-year blew out its bottom right here. Let's see what we got contract-wise. So we get 315,000 contracts, and going to 417. I don't think we're going to do 100,000 in 45 minutes, but we'll see. Bottom line, if you do 100,000 in 45 minutes, that could present a very large problem inside the interest rate structure, because then you'd have a ABC structure on the way down. Some of the high volume stocks out here, we get Rite Aid down 14 cents. That's trading at $2. You get GE, that's down 20 cents. I think GE is trying to bust out its low out here today. Walmart's down 232. That's filling the gap from about a month ago. That got slammed yesterday. Micron Tech is up 10 cents. You get Facebook up 290. We have U.S. Steel down 150. Let's go into GE and see GE's problems. GE is ready to bust to the new lows again. So lows thus far in GE's 1423. You're at 1452. Has hit 1445. 877-927-6648. We have the Dow Industrials up 20. NASDAQ's up 33. S&Ps are up 6. We'll come right back, folks. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 22. You get the NASDAQ up 33. S&Ps are up 6.5. Let's go take a look at the strength versus the weakness inside the Dow first. Dow Industrials up here. The strength, you have United Technologies putting 23 positive points in. Boeing's putting 18. Big Mac is putting 16. JP Morgan's putting 11. Taken away from it, Home Depot, negative 19 points putting into the Dow. Walmart, 15. Chevron, 7.5. 3M, 7.5. Visa, 5. Inside the NDX 100. Excuse me, folks. Sorry about that. Inside the NDX, the leaders out here, you got American Airlines is up 2.8%. Henry Schein is up 2.2%. You get QVC up 1.8%. Taken away from it, Dish Networks is down 2%. NVIDIA is off 2. Lam Research is down 1.6. And you get Walgreens down 1.8. Let's go into the Walmart and go see how close you are to that gap. So the gap, oh, this is really dangerous for Walmart. You know, yeah, it is. It certainly is. So you had the gap. Walmart came down yesterday on earnings. Came down 10% yesterday. You're down $3 today. You're down 3%. Bottom line, you are coming into 90.85. We hit 91.24 thus far. It's going to fill up that gap. Now, that being said, what you have with Walmart now is this. You are coming off highs with monster volume. You've only blown away the strength it had on the way up the week of the 17th of November. That 88 million on the way up. Well, we've done 94 million, and 2 days aren't even over. So you get a picture. We're talking about a 5-day week, which we're going into. We've done 2 days. So what does that set up? Oh, that sets up busting the 89, coming down to the next level, which is 86 to 79. So Walmart's got some big problems out here. We go take a look at the Google, see how Google's setting up right now. Google came into its gap higher. Now, this is just the opposite. This is kind of cool, actually. What we had with Walmart, Walmart had gapped higher. It starts pulling back, and then what ends up happening is that turns into a magnet that's pulling it down. When you gap down, you don't necessarily have to fill those gaps. The gaps that are basically gaps higher almost always get filled unless that company gets taken out. So now we're just talking the opposite. Google comes out with numbers, gaps down. The top of that gap is 1123.07. Google today goes to 1133.97. We're under that gap. That's going to be a failure on price, failure on volume. We've done 1.1 million, and that it's going into 4.8 million. Let's go over and take a look at Anico Eagle. Anico Eagle came out with numbers last week, had strength, and guess what? Not good. So 41.56. That was the low of February 9th. It goes topside with strength up to 46, and they're selling this thing down. It's busting the 40.70, 1.5 million with 1.5 million. So let's bring this back. Okay, on a weekly. So now what are you doing? Okay, so on a weekly, 7.6 million is one. Well, let's go to 39.06. 39.06 is where it came off the lows in December of 2016. What you'd really like to see it do is hold right here, and this is why. Right here, so the high of a major low. A major low is December of 2016, the second week of December. The high of that was $40.50. The low was 35. 12.4 million is the number that the volume characteristic. Now, it's not going to do 12.5 million this week. The odds are pretty bad. You know, right now, 2 days, we've only done 3.2, and we've done 1.5 today. So that's your benchmark, man, 40.50. Because if it doesn't hold 40.50, then game is down to 35, which the bottom line is that someone's selling this thing down. So it says downgraded at GMP. Who the heck is even GMP? GMP analyst Steve Butler downgraded Anico Eagle to hold from buy. Anico has 11 buy recommendations, 9 holds, 2 sells. Investors who followed Butler's recommendation would have received a negative 13% last year, the same as the company's performance. So it is what it is. That's strong stock, but bottom line is that it's got to hold that 40.50 number. Let's go over and we take a look at the silver contract. So silver out here, silver's up 1/10 of 1%, $16. Okay, silver was as high as $16.80. Right now you're at $16.54. Yeah, this is a pretty good toss-up, actually. So what happens with silver is this. The real kicker is that were you pushing higher with volume or are you pushing lower with volume, you know? So it's basically a toss-up, you know, because you have volume in the baby today, and we got pushing it to higher price, but now bottom line, you're at the lower end of the range. Now, we're not at the swing point, but neither were we when we went topside. Let's go take a look at the SLV. I'll take a look at a few silver stocks. SLV is not a bad setup. That's up 3 cents, 15.57. I believe Pan American Silver also come out with numbers. Okay, so that was down 64 cents, $15.11. Let's see what they said. Okay, so their earnings per share were 19 cents. Well, they're supposed to be 19. They made 13, so they didn't make their numbers. They generated $79 million in net cash. Big deal if you don't make your numbers. That's the bottom line. Okay, so if we take a look at this. Okay, so you're backing into 2.6 million, 2.1 million. You're backing into 2.6. That's not a bad setup. You want to see a rejection. 1547 would be a great rejection. That would be a, you know, we're into that bar right now. If we stay in, you're not far into the bar though. That's the bottom line. You know, you get 30 cents into the bar. Well, yeah, 1469 could be game on that. That's the bottom line. 1469. If we go over to Bitcoin, they're taking apart Bitcoin, that's for sure. So Bitcoin right now, let's see, that's down $1,423. That's trading 10,273. This is going to get interesting because, you know, of course, the first time that they start trading at the CBOE, the stocks, the coins at 19,511, does a few legs down, gets down to 5,900, comes right up to ICE, and then bottom line gives it up. So if we go take a look at some of the contracts in here, yeah, these are what's happening now, folks, is you're getting volume inside Bitcoin. That's what's also happening. At the CBOE, we've done 8,000 contracts. At the CME, we've done about 7,000 contracts. So that's 15,000 Bitcoins. That's not a huge amount, but you stay right there, folks. We come right back. Dow Industrials right now up 24, Nasdaq's up 37, S&Ps are up 8. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now up 50, Nasdaq's up 49, S&Ps are up 9. So let's see what the good old Fed has to say. Federal Reserve officials grew more positive on economic outlook, citing substantial underlying economic momentum. They were increasingly optimistic about achieving their inflation target. According to the minutes, Fed officials anticipated that the rate of economic growth in 2018 would exceed their estimates of a sustainable, longer-run pace and that labor market conditions would strengthen further. They also indicated, a number of participants indicated that they had marked up their forecast for economic growth in the near term relative to those made for the December meeting. A majority of the participants noted that the stronger outlook for economic growth raised the likelihood that further gradual policy firming would be appropriate. Participants also discussed numerous uncertainties about the outlook. Several cautioned the imbalances in financial markets that may begin to emerge as the economy continues to operate above potential. Fed officials also speculated on whether the tax cuts would translate into higher compensation for employees. It was noted that the pace of wage gains might not increase appreciably if production growth remains low. That said, a number of the participants judged that the continued tightening in labor markets was likely to translate into faster wage increases at some point. The minutes also explained the new wording. Members agreed that the strengthening in the near-term economic outlook increased the likelihood that a gradual upward trajectory of the federal funds rate would be appropriate. They therefore agreed to update the characterization of their expectation for the evolution of Fed fund rates in post-meeting statements to point to further gradual increases. Bottom line, market out here is, let's go look and see how many rate hikes that Fed funds futures rate has just put in. Okay, so your next meeting is March 21st. That is at 100%. The meeting after that is May 2nd. That is at 78% right now. Then that'll be for another price hike. Then June 13th, that goes down to 60. It's pretty big, though. That's, you know, when you're talking, well, March to June, you're still over 50%. Then that would get the Fed fund futures rate at 1.75 to 2%. Then it goes down pretty dramatically. It goes down from 60 to 14. But what that also does, when you're looking at this, you can see what's happening. This is pricing in a probability that on the next, well, the first meeting is March 21st. That's 100%. The second one is 78, which is pretty high. Third one in June is 60, which is still pretty high. So we'll see if they can bang one after another. I can tell you they will not be banging one after another if the market basically is going into the red, you know. And you can see that the volatility is out here, and I suspect it's going to stay out here. The real question is going to be how fast the market moves down versus how fast the rates move up. Because the correlation is pretty direct right now. The market takes conniptions, you know, and I suspect what we're going to have, these will end up finding a bottom. They're going to find a bottom, though, because they've gone down, rates have gone up, prices have gone down, market will go down, and then buyers will decide that, okay, at this particular price point, I will put more money in bonds. And you can see when you're approaching 3% on a 10-year, guess what? If we put I'll put the curve up here. So the curve right now, you can see we're certainly not flattening out. The whole curve is up today. You have the 2-year at 2.2%, the 3-year at 2.4%, the 5 at 2.6%, the 7 at 2.8%, the 10 at 2.9%, and the 30 at 3.2%. You know, thus far, what it has done inside the mortgage market is that, which isn't bad, by the way. This is kind of intriguing that, you know, we've had the 10 years move a full percentage point. The mortgage market has actually moved about 0.5%. It's at 4.4, 4.5. That's what you can still get a 30-year at. So that's not the end of the world. You start moving into 5, 5.5. People haven't seen that in a long period of time. Some people have, I don't think they're actually going to be buying houses have ever seen that. So that's where it was. I suspect it could get pretty dicey. Let's go take a look at a few of those home builders. We'll go to Lennar first. Yeah, it's not bad. Lennar is down 11 cents here at 59.05. Toll Brothers had higher price today. Gave it up. It's not bad either. up 31 cents, 47.47. You know, what we did have out here this morning, and this is where this gets interesting. They had, let's see. They had the housing numbers out this morning, and the housing numbers were shot, meaning it's not the one. Sorry, they came in light. The housing numbers came in light this morning. Now, what that does, of course, is that helps any type of builder or anyone that's in the real estate business in general, because the bottom line is that we have a lot more people, and people need houses. So that's what the yin and the yang of this deal is. Yeah, I can't find the exact one. I'll get that during the break, though. Yeah, no supply, little affordability. Bottom line, you know what's interesting? The whole affordability deal. It seems that houses almost never are almost affordable. You know, the bottom line is that you got to get ahead of the crowd at some particular point, because it seems like they're always expensive. You know, every 15 years they get inexpensive for 2 or 3 years, and then they're expensive again. And it's that cut and dried. And then what, of course, and what this is all, what it's all about too. The bottom line, it's all about the signatures. It's all about the signatures, and you know how cash gets released into the marketplace. And cash is definitely getting released into the marketplace. See, one of the catalysts out here goes like this. You can have the rates go up a bit, but because mortgages are easy to get, it makes a huge difference. Because there's a secondary banking structure out there that's huge, that's in play. And then, of course, the bottom line is that you have so many more people, and what you do have is that you have the next demographic that's coming up, which is about the 35 to 14. They are just coming into where they, bottom line, are going to be coming into earning big money, needing houses, and you know the rest of the baby boomers that are out here aren't necessarily moving around that much. So the squeeze is going to be on, I suspect, for quite a while. That's how it seems to be out here. 877-927-6648. Let's go take a look at those E-minis and trying to figure out where they are going to be coming into this close. So right now we've had a spread in the E-mini, 27.47. It's at 27.06. So you got a nice 41-point spread, which is pretty cool. You stay right there, folks. Come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 14. You get the NASDAQ up 22. S&P's a flat. And bottom line is that, 15 minutes. They're going to bring this thing into the red, folks. So bottom line is that whether you can take a look at just about whether it's the SPY, the diamonds, all of the above, you got up to higher price. The difference is that you had lighter volume, gave it up on price, and that says now the shot is downtown. The SPY got to 274.72. You're at 271.25. The NDX 100, that's the big one that this thing had to really give it up. And it did, which is pretty amazing. Well, we got to 167.72. You're at 165.64. So this still has a shot to make it. It's 165.75. That is the number. You know, if you close above that, then guess what? It can basically go after that high of February 5th. That's the only high that we're talking about here. We go into the, let's see, so NQs, okay, let's go take a look at those NQs. I'll get on those NQs at 66.10. We're at 67.97 on the NQs. Yeah, this is a nice failure. So we get to 68.85. 68.13 was the number, and it's giving it up on spades. Now, what happens is this, too, by the way. So when you get a test, you know, the test is the number from the February 5th. But what you're also going to have here now, which is pretty amazing in the NDX 100, it can't even hold all the highs of Friday, Monday, and Tuesday. That just what that does, that makes it a more bearish situation. That's how that shakes out. Because when you do a test like this, you know, the bottom line is that the reason that that's the benchmark is that that's where we fired down from. The NDX came down 450 points that day. Monster volume, so that's what it's trying to get through. That's where the sellers are. That's what people say, oh, thank God I just got my money back, okay? Or at least got some of it back. Because you can imagine, there's people that are up there, they're long, right? Bottom line, you go all the way down to 6,100. Well, guess what? At 6,800, that's a lot better than 6,100 selling away. And just so you know, if you were in the futures market there, that's 68, 67, that's what? That's $14,000 per contract. You know, look at the Qs. The Qs would set up the same way, meaning price-wise. On price-wise, the Qs would set up that, yeah, instead of getting out at, instead of getting out at 150, you're getting out at 165. Yeah, big difference, man. There's no two ways about that. Huge difference. We're going to take a look at Microsoft, or actually NVIDIA. So the chip market, great market on the way up. NVIDIA out here today, got to a new high, pull back. Amazon, I hope Amazon hit its high, because we were looking at Amazon this morning, and Amazon was basically saying, number one, it wanted to hit it, but it didn't look like it was going to. Oh, this is awesome. Okay, so check this out. Amazon. So Amazon had a high volume high. That high volume high, February 2nd, $14.98, 11.1 million. Also has a high volume low, $13.44. What do we do today? You go to $15.03, get over the high. Looks like we're going to close underneath it. You did 5.6 million versus 11.1, and this is where this gets cool, because when you can do a couple relationships inside here, it makes it a whole bit different. When you get the indices, then you get some of the monster equities that are in a consolidation, and Amazon's one of them. Can't bust it up, meaning, and Amazon's been a bulldog, no doubt. Now you get 13.39 to game on. That's the consolidation. Why is it a consolidation? Because you came down with monster volume. It came up. It just tested. It looks like it's going to fail. You fail. You're going to go down the other side. You put that together with the well, you can put that together with Google. Google also failed. And then put that together with the actual indices, and it looks to me right across the whole market, you're going to get failures out here today. Google closed under 11.2307 would be a failure. Right now, you're at 11.20. And there's no doubt that we pushed enough volatility around in here today to get some real action going. Let's go back over to this 10-year for a second. So the 10-year, 120.02. I think that's the exact number of that low, too. 120.01. Okay. So the 10-year is trying to get into the last Thursday's low. You did 1.9 million contracts thus far. That's going into 1.8. So you're pushing into that with higher volume. And that says, guess what? You're pushing it to higher volume, that baby can crack. That's the bottom line. 30-year did crack. That being said, actually, let me go look at this. I'll do this 10-year a different way. I'm going to do this 10-year in a continuous contract to see where we're at. Yeah, 10-year bottom line. Now this is pretty intense. So we're at 120. This actually is game. This is game for like 117, 117.22, somewhere down at that level. Bottom line is you still do have 12 minutes to get a rejection here, because what we will see is this: if this market, when you get a market like this, folks, that has really gone up really nice like this, gives it up very quickly. You got to remember something: is giving up. The Dow's giving up 225 points in 2 hours, hour and 49 minutes. When you get that, you could get a real trouncing at the close, because what we would have had there is that buying the dip, you know, basically hasn't been here since the market ran down. So the market ran down. More than likely, what probably happened is that people didn't buy it, but they saw it crawl all the way back up. I could picture that you get a big expansion of price today. They say, okay, I got to buy in now. I got to buy in. And if that's the case, what you'll get is you'll actually get more sellers coming into the close. The reason being is that as soon as they bought, that's when that market turned. And it's a lot easier to push a position out when the market turned like that and say, okay, that's it, I don't care, than a situation if you've been in for a longer period of time. So I suspect as we come into this close, we're going to see just how many had bought at that break when the market was up 150, then went up 250. And if we see this expansion on the way down, what you will see is you'll see the notes and the bonds reject that lower price. Because then what you would get is the fastness of the moves in the market more than likely will turn around and say, okay, man, we are going to start buying into this bonds. Dow Industrials down 55. NASDAQ is up 9. S&Ps are off 2.5. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 86. You get the NASDAQ up 5. S&Ps are off 5. Bottom line is that we go take a look at this Dow for a second. Yeah, so they got it into the lows of yesterday. Let's see what they're selling off inside here. We looked this the first time. So, yeah, they're selling just about everything off now. So, putting in the positive, United Technologies still putting in 20 positive points. McDonald's 14, JP Morgan 5. That's about it inside that Dow Industrials. Let's go look at Home Depot. Home Depot is putting in a negative 25 points. Yeah, that's nothing. That's down $3. That went higher yesterday with volume. That's still in the consolidation. It has a high volume low. So all of these high volume lows from the 6th, folks, will get tested. They're either going to get tested or they're going to get blown away, and these are monster ABC structures on the way down. This is where this is going to get really intriguing, and it will have to do with how much cars gets built before the market goes after them. Because what you have is that when we went down so quick, and the force, you know, it takes a bit. That's a huge amount of energy. I mean, bottom line is that it's very unusual when you see markets go down 10% in all of a week and a half. You know, most of the time you know, down 2 or 3%, build some cars, get another 2 or 3%. Now what we have here is that you get the nice counter trend bounce. I expect, you know, the way that we're trading right now, we could get nasty out here tomorrow. That's kind of how this is shaking out. You have 2 days to get nasty, and then maybe it goes to the highs of the last low out here, which is not the end of the world. But bottom line is that I expect, number one, you're going to be down there. Number two, the volatility is going to stay high. Right now, you get the VIX trading at 1865. So we had a high of 20 today, 21, the low of 1697. You stay right there, folks. We get lots of numbers coming out after the close. We are in the middle of earnings season. Dow Industrials right now, yeah, they're dumping it. That's where the buy was, folks. Dow's down 120, Nasdaq's off 1, S&Ps are off 8. We're coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You can have many ideas in your head, many great ideas in the head. But without action upon that idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. What a market, folks. We had the Dow Industrials down 166, Nasdaq down 16, S&P's down 19. That doesn't seem bad, but the bottom line is, folks, if we get over and we take a look at where we were, we go into those S&Ps, the S&Ps had a price movement of 51 points. We had a high out here of 27.47. We are at 26.95. Dow Industrials also had the price move of about 400 to 500 points. You're down 166. NDX 100 composite, same type of setup. You have a failure in price, failure in volume right across all the indices. They're in harmony. What are they doing? They were going into your downdraft from February 5th. Couldn't handle that downdraft. We had the Fed minutes come out. Pretty amazing market out here today. So the Fed minutes come out. Market had been up. Bottom line had been up about $1.50 Dow points. Fed minutes come out. It goes up 245. Gives it about 10, 15 minutes at the highs there, and then they start unloading. They unloaded everything just the last hour and a half coming into the close. The composite got to a price point of 73.38. You closed at 72.18. Any close under the 72.77 was a failure on price and volume. And this is right across the indices as well as the ETF structures. We did 889 million inside the NYSE. That was going into 1.3 billion. That's where your failure comes down, price and volume. NASDAQ composite 1.9 billion versus 3 billion. Pretty intense there. There's no two ways about that. Look at the IWM. We take a look at the IWM. IWM out here. That traded to a high of 154.81. The benchmark was 153.79. You closed out at 152.21. You had 24 million going into 52 million. SPYs, just to give you the volume characteristic in here, we did 84 million versus the high of last Friday, because last Friday it failed on price and volume. Last Friday did 160 going into 294. So that correlation, this is what you want to wrap your head around. Where the strength versus the weakness, where the supply versus the demand is. You can see you come down on 294. Your first bounce was actually 2 days after that. You got up with 167 million. You went to the lower low. You bounced again with 160 million. You can see 160 versus 167 is getting weaker, but look what happened here. 90, 160, 294. See ya. Don't want to be ya. Gold contract. What do we have with the gold contract? Gold contract got down to a price point out here, GCJ. Got down to a price point of 1324. We are at 1326.50. Now, this is where the difference is in the gold contract versus the S&Ps, the NASDAQ, the Dow. We're certainly pulling back. You know, gold last week goes topside, really nice, goes from 1319 to 1358. Does 432,000 contracts. Yesterday, we come down way too much volume. Still lighter than we're going up against, but it was, you never want to see an expansion of volume when you're retracing. That's the bottom line. We did 374,000. Today, we did 243. That characteristic is good in the context that it's not destruction. What we do need now inside that gold contract is a rejection of lower price. You're pulling back to the strength. You had lighter volume than yesterday. That's bottom line set up that it has the shot to get a rejection of lower price. The GDX, same setup. GDX, yesterday we came down with 47 million. Today did 38. You're going into 95. Notes and bonds. Let's go take a look at note and bond market. The note market and the bond market, bottom line, broke down again. Well, the note didn't. It's teetering. The note market hit 120.02. The low is 120.01. We did 1.9 million contracts, and I think we're going into 1.9 million, actually. Let's see. Yeah, we know we're going into 1.8 million. So we did bigger volume. That's saying that this low is going to get tested. We're one tick away from it, so there's no reason it wouldn't get tested. The 30-year, we take a look at the 30-year. 30-year was down a full point and 3 ticks. That is under the lows of the last 8 trading days. And you do have a contraction of volume, so this has a shot to get back, you know, up into at least the consolidation point. We'll see if that can fly. We're not that far away from it just yet. We're 143, well, 142.04. All right? No, 143.04. So that's only 6 ticks away from where it did break down from. Let's go take a look at some of the higher volume stocks out here today. This is what you had. Come on, baby. This is interesting. This thing is slowing down. Okay, so let me just get this other screen up, see if we can do some action there. Maybe. There we go. Okay, so we had GE down 25 cents. Rite Aid was off 18. Walmart, 2.59. Now, Walmart's finishing up that gap. Walmart got smoked yesterday and today. We had, let's see, Devon Energy was down 11%. That's down $4. Microsoft was off $1.20. Facebook was up $1.90. NVIDIA down $7.57. That's after NVIDIA hit all-time highs, too. So that baby had some price spread out there today, too. We went from 251 to 241. Amazon's the big number, folks. What I mean by the big number is this. Amazon tested its high, rejected the high. That's saying Amazon now wants to run down to 1265. Amazon made 1503, got over the high of the 2nd of February, had 11 million shares, 6 million today. We're going south. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over in good old GE, folks. Bottom line is that GE just keeps making excuses, but this stock is in trouble. And so GE, $14.23. High volume, low, 129 million. Guess what? We're coming into it at 97 million. This thing's going to blow this away tomorrow morning. And if we get another ABC down. This GE's been doing ABC downs in a big way. What you'd get out of this, let me put this on a weekly for a second. So on a weekly, it would be the same as the daily, I guess. Yeah, it would. Let's put it back to a daily. Okay, so the daily, 19, let me do it the most conservative way. 17.36. It's not bad. It's only $2.30, but that's enough. That gets it to $13. Yeah, this thing's going to 11 bucks. And what very well may happen, this is something that, doesn't happen, and we're probably going to see GE, number one, not only down at this level, but GE is going to get kicked out of the Dow also. 1135 is the high of the low. The low, if we come into 1135 too hot, and right now it is coming in hot, meaning big volume, then 572 is game. And 572 is the high volume low from the 2009, which was the bottom, of course, of the market. Let's see, they came out with a forecast today, and what do they say? General Electric is heading to the bottom, is heading toward the bottom of its profit forecast for the year as the manufacturer faces challenges in its finance operations. A top executive said Wednesday. What you're going to see with GE, folks, GE, this is going to be pretty amazing watching this shake out because the SEC has already asked GE for the books. We're going to find that GE was cooking their books for years. That's how this is going to shake out. That's the bottom line. Following a large charge against an insurance portfolio and plans to shrink the GE Capital division, the company's earnings are probably more at the lower end of the range, the CFO said at a Barclays Industrial Select Conference in Miami today. GE didn't change its adjusted earnings of $1 to $1.07. The thing that's amazing is that when you start reading about some of this, the Journal did a pretty good job of dissecting how they actually said they were making earnings for so many years. One of the big parts of it happened to be that they're in the generator business, the locomotive business, and they basically were signing contracts out for 30 and 40 years, and they basically were kind of saying, well, they were flat out saying exactly how much profit that they were going to be making on this in the future, booking the profit now, which they can do legally. The bottom line is, though, guess what? That profit never came in. It not only never came in, what ended up happening is that they very well are going to lose on a lot of that. And I know from the 2007, 2008, and I'm sure you heard me say this many times, in 2000, it started in about 2005. In 2005, what the racket was this, folks, is that you could have, GE had a balance sheet that the world thought was great, AAA balance sheet, the whole ball of wax. So what was happening at that point, money was so easy, is that the large broker-dealer community, the banking community, Goldman, Citigroup, the big banks, they would allow, let's say, you'd go to GE and say, okay, listen, I have another client that wants, to float a whole bunch of bonds. Bottom line, their credit rating isn't as good as you. Can we use your credit rating? You sign off on it, we'll give you 0.5%. Bottom line is that they did a lot of those deals, and those deals, of course, they backfired. That would be just like you or me signing for someone else that, bottom line, explodes. What ends up happening? Guess what? It comes back on you. You're on the note. That's what's going on in GE. Now, they haven't even gone down to that yet, because I haven't read that down into that point yet. We'll see it, though. Where they did go with GE is that they went with the first Genworth deal, because the Genworth deal was long-term care. They got rid of that thing a long time ago. But guess what? When they got rid of it, they're still on the hook for that debt, and they're on the hook for as many people come into that long-term care. That was the first one. The second one was a few weeks ago, was the article that just the Journal just had, and that is that they had said that their contracts are worth so much money into their bottom line when they weren't. We'll see when the next shoe falls off. And the next shoe, I suspect, is a lot more than any of us actually even think. You know, the SEC, I guess it was about 6 weeks ago right now, they, when they came out with when they came out with the Genworth deal, that they were responsible for big dollars, the SEC starts subpoenaing records from them. You know, because you got to think about this for a second. This goes back, you're talking about, that goes back over 10 years ago. So they were probably pulling these deals 15 years ago. The amazing thing to me is that you can actually pull that deal off, and this is where financial accounting is so wild. If you can borrow enough money, on your balance sheet, it's saying that you're basically making money. So your shareholders look, hey, we're making money, we're making money. Well, what they don't understand is that the only reason you have debt, or you have money, is that you've got it in debt. That's coming on your balance sheet. Your balance sheet says you're making money. What no one quite, I'd say, understood, though, is that the money that they said they were making was in the future. So it'd be like you and I saying, hey, we got this great deal. I'm going to sell you this deal, whatever it is, and I'm going to make profits in the next 20 years. Well, bottom line, it's not going to shake out like that. So trouble in paradise. Let's go take a look at Pandora. Pandora just come out with numbers. Pandora closed at $4.87. That is trading at $5.30. Let's see what Pandora has to say. Okay, so their revenue estimate was $375 million. They made $395. They expected to lose 9 cents. They lost 21 cents. Yeah. Still trading up. I guess they're trading up because they got bigger revenue, but that's quite a loss leader. Let's see what they have to say. So, fourth quarter revenue was $395. The adjusted loss was 21 cents. Total listener hours was 5.03 billion. Active listeners was 74.7 million. I'm an active listener. I don't know how they make money because I've never given them a dime. I think Pandora's dynamite, man. I listen to it all the time. But it blows my mind how, you know, I never even look at an ad. I mean, they don't even play a lot of ads. You know, Pandora's gone from $40.44. It's at, well, it's at $5 now, but bottom line is that we'll find out. Let's go take a look at, so this is Applied Optoelectronics. They manufacture optical semiconductor devices. This closed at $34.55. This is trading at 33. This stock's a mess too. So they yeah, the shares are down, that's for sure. The estimate was 83 cents. They're saying they make 89. But guess what? They didn't make their revenue. 86 million, they only took in 79 million. You stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the X SAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow finished down 166. You had the NASDAQ down 16. S&P's off about 15.5. Let's go over to Roku. So Roku also just come out with numbers. Roku closed at $51.10. The low for the year here is $15.75. The high is $58. That's quite a move in 1 year, no doubt. It's trading right now at it's trading at 41. This is down. Oh my God, this is down 10%. No, 20%. All right, yeah. Let me just look at this again. Yeah. $10. It's down 20%. So where is 41? Let's see. We got 39 as the last swing point. Well, here, let's see what they have to say. Okay, so forecast for they missed the analyst estimate. They see first quarter revenue, fourth quarter. Okay, let's start with fourth quarter revenue. The estimated loss was 10 cents. They lost 6. They see revenue was 188.3 million. The estimate was 182, so they had more revenue. Revenue per user, fourth quarter average revenue per user was $13.78. In the first quarter, they see that they are going to, revenue-wise, take in 120 to 130. The estimate had been 132. They're missing the guidance. That's the bottom line. This is pretty amazing, actually. So you're down. Let me put this back a bit. Oh, this is a, let me see what this went public at. So this is pretty new anyway. No, this is a good score. This went IPO September of 2017 at $14. So there's no doubt that that is a decent score. Let's go take a look at, you know what I wanted to look at. So Amazon, and let me pull this up because this is pretty intense. You talk about the content business getting competitive, folks. Amazon and Netflix are just pouring huge amounts of money into their programs. And what this is about, Netflix, NFLX, let me find this thing. What it's about is the aspect of the price of each episode has, here it is, I got it right here, beautiful. So the cost of TV content is skyrocketing thanks to the rise of streaming giants Netflix and Amazon, which are willing to splurge on shows, especially originals. The price of dramas has doubled to $5 million per episode from 2 to 3 years ago. putting huge costs on traditional operators, meaning that would be NBC, ABC, those types of operators. The content creation business is enjoying unprecedented success with a big bump in demand and cost of scripted shows. Broadcast cable streaming services featured 487 scripted originals in 2017. That's 125% more than 2010, leading the coinage of the term peak TV. But with the massive increase in the number of series, costs are also ballooning. The average price of a one-hour drama on a cable network is $5 to $7 million versus $3 to $4 million a few years ago. That's pretty amazing. For broadcast networks, the average price of $3.5 million, up from $1.5 to $2 million. Netflix is home to some of the priciest dramas. The second season of its original hit Stranger Things racked up a per-episode cost of $8 million, while The Crown cost an average of $13 million. Other streaming services such as CBS All Access have followed suit, paying about $8 million an episode of Star Trek Discovery. Let's see what else is there. This is pretty wild. Netflix, oh, this is a trip. Listen to this. Netflix has said that it is willing to spend up to $20 million an episode for a scripted series, given that it has 118 million global streamers. The company's spending binge has it forking over $5 to $10 million per episode for as many of its top shows, racking up a content bill of $8 billion in 2018. Bottom line, folks, it is amazing. Netflix has amazing series. I mean, that's why people are just cutting the cords, I'd say, you know. Yeah, legacy companies as CBS, Fox are now faced with the sticky situation that they must pay substantially higher sums to create new shows, even as their viewership shrinks. So when they, let me put this over so you can see this if you're watching Target TV. This is pretty amazing. So here's the cost breakdown. And I guess this is going to have to do with the quality of the programming, too. Netflix, now this is this year, 2018. Netflix, $7 to $8 billion per year. This is wild. So they're spending $7 to $8 billion per year. ESPN, they're right up there, $7 to $8 billion. Same. Amazon, $5 billion. NBC, $4.8. CBS, $3.9. Hulu, $3 billion. And HBO, $2 to $2.5. HBO better get going, because the bottom line is that, you know, that can be a non-entity pretty quickly. You know, I mean, they were the first ones out there, too, that created great content, right? There's no doubt about that. But guess what? I guess the idea of how many different ways that we can actually view content is absolutely huge. And I can tell you, looking at it seems that anyone that's basically, I don't know, 15 or younger, they're not, TVs are out of sync. It's not going to happen. They're all on phones or pads or whatever. Do you know what I'm saying? And what ends up happening, yeah, you could have a screen, but regular TV, I don't even think they're going to know what NBC is or ABC actually is. Let's go take a look at some of the higher volume stocks out here. Oh, Walmart. Let's go to Walmart. So Walmart came down second day on volume, monster volume at that, too. Walmart right now is trading at a price point. It's getting into the gap. Let's see if it made it into the gap out here. So 91.52 came down $2.51, 90.85. So Walmart, this is really dangerous for Walmart, and this is what it is. When you go into the gap, that ends up being some kind of support. That being said, the volume is way too high. Yesterday we come down with 52 million. Today you come down with 49 million. Bottom line is that you're going into 8.4 million. This thing's going to blow that away. And if that's what we get, your next leg down there is going to be down at the 81 to 79 area. And what we do have inside Walmart is this, and this is a big number. Once you get back inside the $90.97, you are in a lower range. So it's like you went topside, you're at the top of the building, couldn't handle it, you come back down, and Walmart's case, we're coming back down, and you're actually coming back down with volume expanding. So that is always a dangerous place to be when you have volume expanding on the way down. UTX out here today was up 280. What that's all about is that they're thinking they want to split that in 3 now. That's what they're talking about. You stay right there, folks. We're coming right back. We had the Dow Industrials finish down 166, NASDAQ off 16, S&P's off 13.5. Come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Bingo. There we go. Sorry about that. We had the Dow finish down 166, NASDAQ off 16, S&P's off 15.5. And what you had out here, folks, is this. So you got into the February 5th high. You had lighter volume. You failed on price, failed on volume. And the NYSE, we did 889 million versus 1.3 billion. On the NASDAQ composite, what we did, you did 1.9 billion versus 3 billion. So that sets up lower prices coming at us. Now, let's go over to the financial sector, the XLF. Why the XLF? Well, what we've had out here is that you definitely have had your interest rate curve, bottom line, go where the banks should be making money hand over fist. They all went up along the curve today. The 2-year, 3-year, 5-year, 7-year, 10-year, and 30. And they all went up around the same amount. That being said, guess what? XLF couldn't handle higher price. bottom line, what we did with the XLF, XLF out here got to a price point of $29.40. That was over the February 5th time frame of $29.41, $29.21. Closed at $28.93. Did 44 million versus 147 million. So that's also saying that these bank structures are going to also pull back. If we go to Goldman Sachs, Goldman's one of the canaries in the coal mine that they want to watch in a huge way. The reason being is that what happens with Goldman is that I believe it's 250.57 is the number. Let's look at it. It's 255. 1 second. No, I got to bring this back further. There it is. Yeah, it's $250.70. And what that is this. That's the high of 2007. Now, we took the high out, and we took it out with dramatically lighter volume. So the reason I'm saying it's the canary in the coal mine is that once you're over that high, yes, you can keep going over that high. What Goldman has done is this. It got over it. It got back under it. It's over it again, and it absolutely has a shot to get back under it at the end of, by the end of the month. The differential in the buy and sell is pretty amazing. You're talking about 80 million shares it broke out on versus the 227. That is one monster number. This month, thus far, we've had 58. So the correlation also goes to the price point that you close back inside that. That would give you a good indication that the rest of the sector is going to be going lower also. If we go to Bank of America and take a look at Bank of America, that couldn't handle the highs today. The Bank of America was trying to get into its highs of 32.67. It made 32.36. Wells Fargo. Wells Fargo, it's pretty amazing. That's the Teflon dog out here. So Wells Fargo, that had gapped away. That's certainly not as strong as the rest of them. Wells Fargo high is up there at 66. That's at 59 right now. You get a high volume low at 54. I know, dude. Berkshire Hathaway. So Berkshire is still the largest weighting structure inside of the XLF. And Berkshire, let's see how this is set up. Oh, yeah, we're going lower. In the banking sector, whatever is happening out here, these banks are not going to be making as much money as we think they are with a wide price spread. So Berkshire is down from 217. You got to 205 today, closed at 201. Has the high volume low that's laying out there at 189, and I expect that's exactly where it's going to go. Yeah, so I do expect that high volume low of 189. That is game. Now let's go to the XLE. We take a look at the XLE. XLE, this is a big heads up. Now, what we're going to have tomorrow at 10:30, or in fact, I'll look at this right now. We're going to have the gas numbers out, oil numbers out. This XLE is giving it up. You know, we've gone from a 78, you're at 66. That's going after the high volume low of last week of 64. And let's see what the oil numbers are, because the API should be out tonight. Let me do it this way. Because when you have a holiday, it's 1 day late. Let me just see. And then tomorrow you're going to get, at 10:30, we're going to get the gas numbers. At 11 o'clock, we're going to get the oil numbers. So here's the API numbers. So Cushing had a pullback, a drawdown of 2.6 million barrels. Gasoline is a plus of 1.47 million barrels. Distilled was a drawdown of 3.5. That normally would be bullish for you know, the oil market in general. But guess what? When you're talking about 75 degrees in New York and Boston and 80 degrees, 89. They said it's going to be 89 degrees in Washington, D.C. No one's going to be using any heat up there whatsoever, folks. It's not even close. You're talking about air conditioning, but I suspect they won't put the air conditioner on because they're going to be feeling so good. If we go to the natural gas market, that was up 1.5% today at 265. We take a look at that. That doesn't have much juice underneath it. So both of those are going to be coming out tomorrow. We just go back to that energy market for a second. And in 2014, folks, it was the energy stocks, ExxonMobil, Chevron, they basically headed lower first. Then oil, of course, went from like $114 down to the, I think we're down to 42. Exxon has just gone from 89, we're at 74. This is going after its high volume low right now. So what also happens is this, picture this. When you have a high volume low, you get a major stock, we're already into the bar. Your probability goes much higher that the indices are going to go down there also. Because what normally happens is that you get one sector that starts down there. And in this particular case, it's the oil sector. We had a question that one of the Tigers were wondering, let's see, is there a parallel between Nortel and GE? Meaning that Nortel had got basically devalued in a huge way. The difference with Nortel was that Nortel just didn't really have any more business because it was a good company. The bottom line is that, guess what? Everyone bypassed it. The GE deal happens to be flat out, my take is it's probably cooking the books for so long. That's how I suspect this is going to come out. It's amazing thus far that, because you got to remember something, GE has already come out and written off, and that's when the SEC went back into them. They written off, they says, oh, oops, we get to write off $5.5 billion on this one deal. Well, $5.5 billion, just to give you an idea, you write something like that off. Let's see, GE takes in a lot of money, but let's just see what that is. Yeah, let's see, that's still pocket change for GE, but still a big number. GE takes in $122 billion. That's what they say, on paper anyway. And now what's intriguing about that is that when they say they're taking $122 billion, those contracts, those are not cash contracts. So they've been saying that they're making that money, but that money's not due for another 20 or 30 years or something. It's a sick deal. Dow Industrials finished down 166, NASDAQ off 16, S&P's off 15. We'll come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to TFNN, you are going to see right on the front carousel, Tiger's Den, open house this whole month. Now, we got a great trading room. We've had it for a long time, folks. It's active approximately 12, 13 hours a day. Got a lot of tigers and tigers in it. This is an open house. So it's over at the end of this month, meaning what? Not over. When you come in it, you get 30 full days, so you can get a feeling of just how this whole room works, the great ideas that we have in it, that not just we have in it, everyone. It's a collective eyes, ears, spirit, all of the above, great ideas. So come on over. Tell your friends about it, too. Please come on over. It's a great trading room. It's a great idea room. A lot of great education, a lot of great traders that are out here. Now, if you happen to be in New York this coming week, the Traders Expo is going to be up in the Times Square at the Marriott. That is going to be Sunday, this coming Sunday night, Monday and Tuesday. I'm going to be there. I want to come by and growl and prowl for a while. That's going to be a good time. That's at the Marriott Marquis. That is going to be on Sunday night. It opens at about 6 o'clock, I believe, and then Monday and Tuesday. So check that out. Come on by. Say hi. Of course, it's always great seeing all you tigers and tigresses out there. Market-wise out here tonight, bottom line, you can expect lower prices. That thing sold off hard coming into the close. We take a look at the, we go over to Asia first. Asia will open in approximately another 4 hours. If we do go take a look at the Nikkei right here, Nikkei last night was up 0.2%. What I suspect we're going to see is the Nikkei wants to make a run down. We're at 21,900. That wants to make a run to the 21,000 level. What's going to be intriguing there is that we'll see what the yen has to do, because the dollar has got a nice counter trend bounce going. The yen also did. We're at 107.75. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.